All right, in this lesson, we're going to go over preliminary engagement activities that has to be done during the audit planning process. So these are the activities that we're going to think about and do in order to make sure that we kick off the audit in an appropriate, consistent, and great way. So the first thing that we have to do is determine the audit engagement team requirements. Now, what do we mean by determine the audit engagement team requirements? What we're talking about here is what people do we need to have in place in order to complete this audit. Now, for instance, if this was a very risky client, we might decide that we need some very experienced auditors on this engagement. That's not to say that we can't have first years that don't have experience, but if there is some risk that we need to tackle, your experienced audit staff is going to know more. They're going to be well equipped with the tools and capabilities to figure out how to mitigate those audit risks. So we may decide to put more of our experienced people, people that we can trust, people that we know have a real keen eye on details on that client than maybe those that are broad and understand it from a big picture level that maybe gloss over a few things but still get the job done. We're not saying that they're not getting the job done, but we've got some other individuals that are very detailed. They're very detailed and they're oriented, and maybe those are the clients those are the people we want on this client better, okay? So determining our team requirement. We're also going to need to look at industry and how well our team fits in that industry. If it's a new industry that we're tapping into, maybe we're looking at our audit team that has a lot of flexibility at learning things very quickly. Or maybe we have individuals that have the knowledge to apply what they know to this new industry that maybe are connected some way but not 100%. We also might look at which one of our audit teams are going to go out there based on their industry experience. So for instance, if our audit firm has a client, if our audit firm serves clients in the aerospace industry versus the finance industry and the manufacturing, we're obviously not going to send the manufacturing team to an aerospace engineering type firm. So we need to know those requirements and see if we can fit those requirements in our calendar. Now, one thing to note, when I was an auditor, what would happen is we would have a scheduler, and that scheduler would put us in different places where we needed to, but that was based on our availability. So if we're going to take on this new client, do we have the availability to put people where they need to be, or do we need to modify their schedules right now so that they can roll onto this client at some point in time? So we need to look at the audit team engagement, what they need, the requirements they need in order to do an effective, appropriate audit so that they're giving a good opinion that reduces the audit risk for giving a wrong opinion. The second thing that we're going to need to do is we're going to need to ensure that the audit team and the audit firm are in compliance with ethical and independence requirements. This is probably one of the most important things, and the reason why is the ramification that can happen later on. The ramification later on is you go through your audit and you find that they were not independent with respect to the client, and then either one of two things has to happen. One is that the entire engagement is now kaput, and now you have to bring in a new engagement team, or you need to move them to a new auditor, which is not yours, and now you're losing out of money and losing out of time. The other thing that might happen is that person that's not independent, all their work is going to have to be redone by another individual, and those are some things that you can't necessarily charge the client, so those are time that has been eaten up by the firm. So it's very important to make sure that everybody that's going to be on that client or the firm itself is independent. Typically, most big firms has what they call an annual independence survey, and on that survey you will basically put everything that you're not independent of. So when I was working at a firm, we had to express all of our stocks that we own and what positions our parents might have, where our friends might work, so that there wasn't an independence issue, and that when the scheduler went in and scheduled you on a client, they can look, okay, this is a public client, this is so-and-so, they've got stock in it, okay, either they need to sell all of their stock or we're not going to put them on that engagement. So it's so important that you do that. A lot of firms have this annual thing where they do it every single year, and then right before they roll on to a client, they do another one, but more specific to the client, so that they cover all of their bases. So we want to make sure that all of our audit teams, in respect to the client, is independent, or in respect to the firm as well. Again, at my firm, what would happen is that the partners in that office had to make sure that they were independent of all the clients that office was serving. So if there was company A that we were onboarding, all the partners had to be independent with company A, even though only one or two partners would be associated with that client. So making sure that they're in compliance with the rules that the audit firm has set in place for all of its employees, okay? And then lastly, the things that we're going to need to do is we're going to need to establish an understanding with the entity. There's three things that go into establishing an understanding with the entity. That includes the engagement letter, the work of internal audit, and then the role of the audit committee. We're going to go through each one of those, but basically what we're saying in number 3 is we need to have an understanding of how the work is going to be done and when it's going to be finished, and who's going to do what and who's going to be responsible for. We call that, in layman's terms, a contract. So we got to have a contract. Now, the way that we basically tell our clients what we expect is through something called an engagement letter. That engagement letter must be signed prior to any work being done because it sets the tone of what we're going to do. It also sets the fees, it sets the date that we expect it to be done, and it sets the expectation of what we need from the client early on. So that letter, that engagement letter, basically says what we are going to do and how it's going to be done. And so that sets the tone. It's a very important piece of document that usually is reviewed by both sides' lawyers. It's reviewed by the partner in charge, the manager in charge, sometimes the senior in charge, but it is reviewed by everybody to make sure that everybody understands what is going on with this client and what the expectations are in this audit. We talked before that the expectation is that we provide appropriate audit evidence for our audit opinion. And our audit opinion is given based on whether they are material in fact, okay? So we're not going to look at everything, but we're only going to give you an audit opinion whether or not materially all of the financial statements are appropriate and necessary and all of that. So making sure that the engagement has all of that. Now, the second thing to think about is the work of internal audit. Now, professional guidance on auditing says that we can use internal audit if we like. However, we must manage internal audit, we must review their work of internal audit, and we need to make sure that we are confident in the controls that internal audits has in regards to the work that they do. We're also looking at the chain, who their chain is. I mean, are they going up to the president? Are they going up to the audit committee? Who are they? So that we can trust the work that they do. So we also need to establish an understanding of how we're going to use internal audits work. Now, we might use internal audits work because it might save us a little bit on the cost of providing that audit, which saves money to the client, and that's why we're using internal audit. And for the company, if they can get away with using internal audit because they're already paying them, they might as well, so that they don't have to pay us. So that's a very important understanding that we have to make with the client. The other one is the role of the audit committee. What's the role of the audit committee? Making sure that they're independent in the fact of the company as a whole, that they're all directors, making sure that we have a direct line of communication with them. What's our conversation with them when it comes to fraud or when it comes to embezzlement? What are we going to do? What is audit committee's role in this audit? And every public company will have an audit committee, and those are the people that we need to have direct access to if we find fraud, and that fraud is happening with upper management. Obviously, we're not going to go to upper management necessarily if we think that there is, if there is fraud. If we think, we may poke a little bit, but we're not going to go straight to them because they can cover it up. We're going to go to the audit committee, who's independent of the company itself. They are part of the board of directors, and they have actions that they can take in order to mitigate the exposure of that fraud from the management side. Okay? So to kind of go over what we just talked about today, we talked about the preliminary engagement activities that have to occur when we're planning the audit. We have to determine the audit engagement team requirements, making sure that we have the right people on our team in order to complete this audit. We also are assuring that the audit team and the audit firm are in compliance with all ethical and independence policies that the company or industry has set within our profession. We're also establishing an understanding with the client in terms of an engagement letter, telling them exactly what we're about to do, what they need to do, who's responsible for what, and who's paying what. And then the work of the internal audit. If we're going to use internal audit, how much work are we relying on? What do we need? What's the expectations there? And then the role of the audit committee. What's their responsibilities? What do we need from them? What do they need from us? But making sure that we all have that correct prior to starting that. The major thing in this is to make sure that everybody's on the same page, on board from the beginning, so that there's no disagreements as we go on. Now, there may be disagreements about small little things, journal entries, or how things are done, but we don't want the major mishaps later on, because it's going to cost the company money, not only the audit firm company, but also the business in which we're auditing. So that's the planning process, and that's what we need to do during the preliminary engagement activities.